Andrew.
Okay.
I don't see your picture.
Probably because I'm in here, my camera is being used for this meeting. So I'm
Okay.
gonna jump out of this one.
Sounds good.
Hey, everybody.
Andrew, your background isn't up.
Yeah, so let's see.
It looks like it's trying to.
Oh, yeah, it does. Oh, you know what? The green screen thing popped up again.
There you go.
Okay.
I'm gonna go on mute, just so FYI, but if you need me, I'm here.
Okie dokes.
I had to stay on the other one just so he could monitor if Nathan joins the.
Okay, good call.
Does the presentation pull up correctly? Just making sure. It looks like it is on my side, so.
Yep.
Perfect.
We'll wait for a few people to join. Glad we could figure that out, Nathan.
Sure. Hey guys, how are you?
Good.
Is my okay, my background is on there already. Okay. Does my background need to be flipped to mirrored? Let's
Nope.
see.
It'll already do it. You're good.
Okay. Okay.
Hey, everybody. We'll give people a few minutes to join before we get started.
Sounds good.
Give people to one after a few people are still joining. Thanks everyone for joining. We'll be starting shortly. All right, let's go ahead and get started. So good afternoon, everyone, and welcome to today's webinar titled How to Prepare for the Big Launch, the First Two Steps in Your IPO Journey. And this is actually part 2 of our IPO Concept to Completion series, brought to you by the professionals at DLA LLC. and today with our special partner, Noble Capital. During this webinar, we will discuss the planning and preparation phases of the IPO process specifically. Our first webinar in this series was recorded on September 9th, which covered a high-level overview of the IPO lifecycle, and it can actually be accessed on LinkedIn if you would like to watch it. I want to take a brief moment, though, before we begin and introduce our panelists joining us today. To begin, my name is Joe Bakutes, and I am a managing director in DLA's accounting advisory practice. I am based in the freezing Atlanta, Georgia right now, and I will be moderating today's discussion. I personally have over 16 years of experience in assisting and advising technology, healthcare, health tech, manufacturing, financial services, and other types of companies as well, with IPO processes, de-SPAC transactions, and other complex transactions as well. We're also joined by another member of DLA's accounting advisory practice. Andrew, why don't you go ahead and introduce yourself?
Absolutely. Thanks, Joe. Hi, everybody. My name is Andrew Hovance. I'm also a managing director in DLA's accounting advisory practice. I am based out of the freezing New York City office. I have over 16 years of experience as well, providing accounting advisory services to both private and public companies across a variety of industries, specifically advising on complex technical accounting matters, SEC reporting matters, audit readiness, IPO readiness, as well as advising clients on transactions such as IPOs. So I'm glad that you're all able to join us today for today's discussion.
Thanks, Andrew. And additionally, we are so excited to be joined by Nathan Cali from Noble Capital. This is an investment banking firm out of Boca Raton with offices in Florida and New York. Nathan will be offering his insight and sharing his experiences from an investment banker's perspective, explaining their role and responsibilities as a part of the company's IPO journey. Nathan, hey, why don't you go ahead and introduce yourself?
Sure. Thanks, Joseph and Andrew, and happy to be on the webinar today to discuss what could be an exciting opportunity for companies. Noble Capital Markets is a full-service broker-dealer. We celebrated our 40th anniversary last year, so we have very mature platforms in the banking, sell-side equity research, capital markets, and advisory practice. I've been in healthcare for 20 plus years, been in capital markets for close to 20 years, and really just my experience is dovetailed into in the healthcare. Spent some years on the public side at a public healthcare company, pharma company, and then was a biotech analyst sell side for almost a decade, and started on the capital formation side and run the healthcare investment banking group here at Noble Capital Markets. And we're helping companies both on the private and the public side, and that entails advisory, bringing in capital into companies, and then helping them potentially get exits through either M&A, IPO, or mergers. So that's kind of what we do here at Noble, and excited to be on this webinar with you guys. And I'll turn the call back over to you, Joseph.
Awesome. Thanks, Nathan. Appreciate you being here. And thanks to everyone on our panel and to those of you who have registered to join this IPO webcast. As a reminder for everyone on this call, this webinar is eligible for continuing professional education credit. So we'll get CPE credit for it. As a requirement, you will need to be connected to this webcast for the entire duration and answer all 4 extremely challenging polling questions. I'm completely joking there. Those will appear over the course of today's webinar, but you must answer those in order to receive credit. Furthermore, during this webinar, if you have any questions at all throughout the webcast, feel free to submit them to the administrator and we'll get back to you. Today's focus will be to lead our panel through a series of questions and topics related specifically to the planning and preparation stages of the IPO lifecycle, the very first 2. Just as a reminder, these are the initial stages of the IPO process and journey, and we'll be discussing further portions of the IPO process in future webcasts. So be on the lookout for those as well. During this webcast, we'll ask the panelists targeted questions and ask them to elaborate and share personal experiences as we navigate the first 2 phases, these planning and prep phases of the IPO journey. But as I mentioned, please be sure to stay connected and keep an eye out for future invitations to our next webcast in this series, which will cover the execution and post-transaction phases, which really the post-transaction is you're effective and you're operating as a public company. These are expected to take place later in 2025. Some of the topics that we will cover on our agenda today will cover project team management overview, team members' roles and responsibilities in the IPO process, as well as dive into pre-filing activities and key areas to consider as a company begins its IPO journey. And just finally, as a reminder, this discussion is geared towards companies that are looking to pursue or have already decided to go public. Our goal is to outline the key aspects of this journey and areas that can substantially impact that timeline that you're setting up to help you make informed decisions and ultimately lead to a successful IPO. So with that, I'm going to turn it over to our panelists. For our first topic, I want to turn it over to Nathan with Noble Capital. So Nathan, you mentioned different strategies for companies going public or staying private and exit strategy. What are, from your perspective, some of the reasons why a company would want to actually be publicly traded?
Sure. Yeah. So, I think IPO can be a very exciting time in a company's growth and future outlook as companies look to do IPOs. There's a lot of reasons to do IPOs and maybe some not to do IPOs. But for companies that are ready for it, I would say it could bring liquidity into some of the long-term investors that have been with the company for a long time, or even some of the founders could be a reason to do an IPO. Raising substantial amount of capital to prepare and bring future growth to a company that's grown but needs a bolus of capital to execute on its plan. And with that, you bring in potentially new investors that can support the platform and increase the branding of a company, increase branding awareness for your goals and your missions that you're trying to achieve. And I think that, raising the capital and doing an IPO, as I was saying, is exciting for a company, but something that needs to be evaluated, and bringing the right people to the table to help you through that process is important. But I think those are some of the reasons that a company would want to do an IPO.
Exactly. And from your perspective, Nathan, that brand that you were talking about, that just goes beyond just, the company in the public marketplace, but can't it acquire talent too? And it can bring on a higher level of talent as well from an employee-based perspective? Very
much so. Yep. With new capital and new investors, it really does help you attract talent, even to the board or to the management team or other key parts of the business.
Yeah, awesome. Perfect. And with that, everyone, we're actually going to have our first CPE question. So administrator, if you could put that up, we'll give people just a few minutes to answer that. Again, you have to answer all 4 of these to get CPE credit. So please feel free. We want everyone to get that credit. Give everyone just a little bit longer to answer that. We want everyone to get their CPE. All right, administrator, I think we're good with CPE question number 1. Thank you for that. So seems like some people are in phase 2 and some people are not completing an IPO currently. Right? Of course, as you move into that, we're happy to help. Okay, so Nathan, we talked about going public, the advantages of it, but as a follow-up to that question, what are some of the alternatives that you're seeing from a company going public? And what are some of the advantages you're seeing from a company not doing an IPO and staying private?
I think this is the real question, right? For people considering, or companies considering doing an IPO. The concept of doing an IPO is exciting, and I think companies get enamored with that. but is it the right time to do an IPO? Or can you stay private? And what are some of the advantages of that as well? Is some of the things I think about to your question. And doing an IPO is an expensive adventure, expensive venture to do. You could be in the millions on cost just to get the IPO done, which is great for the bankers and the lawyers and the auditors. We love IPOs, right? But also it could be beneficial to a company as well. But on the private side, staying private is something that we look at when we're looking at companies that want to do IPOs, because are you ready to do an IPO? Because you could be ready to do an IPO and you can execute and get those done. But yes, one thing to do is consider the cost, but also in the growth strategy of the company historically and then going into the future. Are you prepared for the scrutiny that you're going to get as a public company? Because once you become public, you're heavily scrutinized by investors and also regulators. And so you've got to have the right team in place to perform the functions of being regulatory compliant and spending the money to do so, because it's an annual cost, and it's a significant annual cost to some companies. But also on the branding and the growth of the company. Can you show growth? If you're, a revenue company, obviously you want to show earnings growth. You want to show revenue. You want to show that you can drive business and create value for investors. If you're not a revenue company, let's say you're a healthcare or a biotech company, do you have a platform that can drive value for investors through data points? If you're running clinical trials, are you a phase 2 company that's putting out efficacy data and safety data on patient trials that you've completed? And can you show that data is going to be positive? And do you have confidence in doing so? I think your branding, your news flow, and your growth perspectives are a very important consideration to going public, because without those, the investors will have heavy scrutiny for you, and they're looking and preying upon those companies that can't deliver that. And if you can deliver that, then that's even all the well better to be a public company, because you attract new investors, you create value for your old investors, and the price can go up. And that's what management teams want. They want their price to increase in value and drive investor value at the same time. So those are some of the things that I think are important in considering that. Those are some of the key factors that we look at before a company goes public.
Yeah, I think on nearly every single IPO or de-SPAC transaction or public transaction that I've done, everyone from a management perspective has been shocked at how expensive it is to go public. So, it's definitely a common thing that companies need to think about. I mean, you have lawyers, investment bankers, accounting advisors, auditors, a whole team to help the company go public. So it's definitely a lot. And we'll actually get into—
just to add a couple things to that, I think the management team that you have in place, maybe when you're private, maybe needs to be looked at as you become a public company.
Agreed.
And the same thing with the board, and a strong consideration of your current balance sheet, where it is prior to doing an IPO, because some of these things can take longer to get done. And that comes with the preparation process, as well as maybe the markets aren't available already, and you maybe have to wait a couple months. So there is some delays that happen along the way. So I think you should consider adding some contingency of balance sheet and adding some contingency of time considerations.
All valid, 100%. So switching it, Andrew, I'm an accountant as well, obviously. So as an accountant, what do you think are some of the items that companies will need to think about, from a financial reporting perspective as a public company that, companies just don't think about whenever they're private?
Yeah, and there is a lot. There are several components that go into drafting the registration statement, and the IPO process as a whole, all of which require thorough thought and consideration when contemplating your IPO journey. It's intensive, as you guys mentioned, and I think the polls, it looks like some of the participants here are at that part where they're assembling their teams. So hopefully this is all helpful and relevant. But overall, as one would expect, there are generally just more reporting requirements, right? And from an accounting and reporting perspective, you'll need to consider and evaluate the requirements for a public company. For example, have you evaluated your external auditor's independence, right?
Yeah.
Might not be something that's an issue as a private company, but something that would be relevant because there could be instances where a company's current auditor is independent under AICPA standards, but not so under PCAOB standards. Companies will need to consider whether their financial statements have been audited for their annual periods and reviewed for interim periods. Appropriate financial information needs to be available to prepare such information and data, including quarterly results that investment bankers are going to be looking for the prior 4 to 8 quarters. That goes in the MD&A. And that's used in order to reflect the growth and trends in the registration statement for the business. Companies will need to ensure that all the quarters have been appropriately closed and agree to underlying schedules so that the auditors can perform their SAS 100 level reviews of that information. Right? So these are all things that might be available, but not necessarily being performed as a private company. Another key area to think about between a private company and a public company is auditors might be subject to a lower level of materiality under a PCAOB audit versus AICPA. That's going to open the doors for more rigid audit testing procedures that might not have been in scope historically. So there's just going to be a larger focus on the audit itself. The company will need to evaluate whether the audited financial information conforms to positions and practices prescribed by the SEC staff and US GAAP standards. So financial statements that are filed in a registration statement, Form S1, will need to be compliant with Regulation SX, and the information required to be disclosed will likely be different from the financial statements previously prepared by the company. For example, there are additional schedules that a company will need to prepare as part of its registration statement, such as an MD&A, which is management's discussion and analysis. The MD&A focuses on key areas of the business through the eyes of management. And it relates to key performance indicators, critical accounting estimates, liquidity and capital resources, operating results, as well as disclosure of significant trends and uncertainties. So again, that's more time and resources to make sure that you're developing this content that would go into the S1. Public companies are also required to disclose items such as segment information and earnings per share, which might not be disclosures that are required as a non-public entity. So those are all factors to think about as well. And a company will also need to evaluate its conclusions around technical accounting topics under US GAAP, specifically around areas where there might be differences available for private companies and public companies to elect those positions. Those could be topics such as share-based compensation or business combinations or goodwill. For example, a private company might have elected to historically amortize goodwill over a 10-year period, which is allowable for private companies. However, that's not aligned with goodwill under US GAAP, which an entity would need to record its goodwill and perform an annual impairment analysis to determine if there was any impairment versus that straight lining or amortization election. Companies will also want to understand the new and accelerated external reporting requirements, which can have an impact on the company's close cycle. As a public company, you'll be required to file regular reports, such as the Form 10Qs and 10Ks, with the SEC predefined deadlines. So as such, companies will want to improve quality and timelines of its close cycle by streamlining processes and technologies and standardizing processes to eliminate unnecessary complexities and delays associated with closing its books or having auditors perform their reviews and ultimately issuing their financial statements. And lastly, a company's filing status. That's another area that'll have a key impact and implication on the reporting timelines as well. So depending on a company's filing statuses, as a large accelerated filer or non-accelerated filer, could impact the number of days that you have after the reporting period to issue your financial statements. As you're starting the IPO journey, a company will also need to evaluate the requirements under what's called the Jumpstart Our Business Startup Act. also known as the Jobs Act, which maybe you've heard of. That was signed into law maybe 10 years ago to make it easier for companies to access the public markets. So one of the key provisions of the Jobs Act is the designation of an emerging growth company, or an EGC, which is a new category of issuer with less stringent reporting requirements to encourage IPOs for companies that meet specific criteria. And I think that was updated to be about 1.25 billion in annual gross revenues. So if you were to evaluate that and meet that criteria, you would have less stringent reporting requirements. So some of those key advantages of being an EGC include the ability to file a registration statement with 2 years of financial information versus 3 years of audited financial statements. Also receiving an exemption from the requirements to have an auditor opine on the company's internal controls over financial reporting under SPACs for up to 5 years. So those advantages come with both cost savings and time savings as well. So with all of those above, I know that was previously mentioned, there are a lot of pros. Access to capital markets, we mentioned, greater attention and better brand recognition, enhanced ability to attract, retain, and reward valued employees as a listed company. So those are all positives that are rewards that come out of the all of those other additional considerations from a financial reporting perspective.
I know we work in financial reporting a lot, and we could just spout these off like a list, right? Because we see it all the time. And I'm going to answer my own question, but a follow-up for you. So the one thing that I see companies get so tripped up on, and it could be the same thing, same answer, is the staleness dates that are required in a registration statement and filing. And Nathan, I don't know if you see this, but the financial information, the annual or the quarterly, will go stale, and the SEC will require an update to the interim financial statements. And everyone was hoping that the 10Q would get the financial statements and the registration statement would be updated and filed on May 14th, but it's not. And then the numbers go stale. That is the number one hiccup from a financial reporting perspective that I see. Andrew, I don't know what you see in your role.
Absolutely. No, absolutely. And that's what goes into, the importance of establishing a realistic timeline, right? And having that foresight to understand what those deadlines are and what actually needs to happen in order to achieve those deadlines. So, it's not uncommon for companies to just understand what those staleness dates are so that they can see how that kind of blends in with their roadmap and to identify which period should be included in the registration statement.
I have that.
And just to add to that a little bit, Joseph, yes, we do see that happen, and those are some of the delays that come along, and it's just something that has to be done, right? You have to meet the regulatory requirements, and if you guys need to refresh the financials, they have to be refreshed because the IPO didn't get done in the window.
Yep.
And I always say for private companies, if you don't have an auditor, get one as soon as possible, because what the auditors bring to the table, I think, is probably, if not the most important piece of an IPO, because it's a time-consuming process for auditors. They have to come in and evaluate everything in significant detail, and these things take time. And we always say, if you don't have an auditor, and make sure it's PCAOB,
Yep.
because that will reflect your ability to do an IPO, because you could have an auditor, but maybe it's not the correct audit. So make sure you have the right audit in place. And we always say to make sure you start doing that way ahead of time.
And that they're bought into the process too, and the end goal and the timeline as well, which, always moves, but making sure that audit piece or the audit partner and the engagement team is bought into your goal and timeline, because as you mentioned, that's just so much effort as a part of the IPO process.
Absolutely.
Perfect. All right, Andrew, we talked about financial reporting, which is what you and I do almost on a daily basis.
Yeah.
But what are some of the other areas that you see companies that'll need to consider as they start the IPO process?
Yeah, absolutely. So outside of technical accounting and financial reporting, companies will need to evaluate other areas such as their internal audit. As a company goes from private to public, internal control standards become more rigid, as companies must comply with Sarbanes-Oxley SOX, right? Which requires management to report on the adequacy of internal controls over financial reporting. So to do so, companies will need to enact and formalize a SOX compliant program. to serve as a foundation for establishing that SOX compliance. Part of this process will include reviewing the current control environment, identifying potential inefficiencies or gaps. For example, your entity level controls, IT general controls, business process controls. Are they properly documented? Has management performed a risk assessment to determine which controls are needed to mitigate the areas of material financial reporting risk? Is the appropriate segregation of duties amongst those responsible with preparing and approving financial information proper? Does the company have material weaknesses or significant deficiencies that need to be addressed or have a plan to be remediated, right? So all of these are things that the company will need to think about. And adopting a thorough internal audit approach strengthens operational integrity, positioning of the company favorably for an IPO by showcasing a robust corporate governance structure. As we mentioned earlier, EGCs are exempt from SOX compliance for up to 5 years. They're required to analyze whether or not they meet those requirements each year. And so for companies that are not expected to file as an EGC, it's critical to prioritize those efforts to become SOX compliant, which takes a lot of time and effort and is something that needs to be considered, on day one.
Absolutely.
Companies will also need to evaluate and develop formal IT policies and procedures around their IT infrastructure. So that's the company's applications, operating systems, databases. IT general controls are critical to ensure the integrity of the data that the systems generate. And management will need to ascertain that the ITGCs are in place and operating effectively. In addition to IT controls, you hear a lot about cybersecurity right now. So companies will need to perform a cybersecurity assessment tailored to their specific industry to ensure that they satisfy the ethical practices, regulations, standards, and applicable laws. So it's crucial to have a robust cyber program surrounding that privacy and data protection or integrity.
Which we're hearing a lot of buzzwords about that right now. And I know we received a question in regards to that. So I'm glad you brought it up.
Yeah, and I was going to say too, DLA has several white papers on the topic of cybersecurity and IT advisory available for free on its website to learn more about those areas or what companies are facing or how DLA can even help you. So if we don't include those materials, maybe we can just share a link in the chat to that. Another key area to consider is a company's investor relations function, right? So creating a future state investor relations function with a well-executed communication strategy means developing a streamlined approach for managing company investor interactions, right? So that's something that might be new for a public company. It involves strategies to build transparent communications and investor trust, ultimately supports the company's growth trajectory and stock performance. As a public company, there's an increased responsibility with new public shareholders, and companies will need to respond to investor inquiries, develop the investment community presentations, manage active shareholders. So that's just something else that companies will need to consider, whether there's an IR strategy in place that discloses their KPIs, media plan, communication lines, policies, whistleblower program, insider trading policies, etc. Governance and legal, right? So before an IPO, firms must bolster management with diverse public company experience, right? So as Nathan mentioned, you want to make sure that the management team in place has that background and experience. Legal counsel that'll be responsible for designing the articles and bylaws. Companies should perform an assessment of corporate governance arrangements, including the board composition and committee structures, and changes to meet the public company requirements there. It's critical to identify appropriate board members early in the process, right? To avoid waiting until you're almost public, as that right resource might not be available. Public companies are subject to and must comply with governance and eligibility requirements imposed by different stock exchanges, which often just require the composition to consist of independent board members. So companies will want to make sure that they are recruiting qualified non-executive board members with experience that aligns with the company's strategic objectives. And these individuals are among the best sources for objective advice in early stages. You'll need to form a qualified audit committee. They have an essential role in ensuring the integrity and transparency of corporate reporting. And then, as we mentioned a little bit earlier, too, technology and systems. So you're preparing for your journey, you're going to want to make sure that you have you're evaluating the capability of existing systems to meet those demands. considering factors like scalability, functionality. You really just want to make sure that you're ensuring a smooth transition from public reporting and compliance requirements before an IPO. So for example, with an ERP, right? Are you currently using an ERP system that is capable of growing with your business? Because the cost of implementing a new ERP down the road could be much more expensive.
Huge. Yeah.
Data rooms, making sure that you have a data room that you can use for the IPO working group. Close management tool, is there a tool that you guys can use or improve your close management process? Financial reporting, are you going to use or implement a tool such as Workiva, Active Disclosure, or S2 filings that can help with the financial reporting, XBRL tagging, and ultimately coordinating with the plaintiffs? So I know we touched also that going public or continuing as a public company can be expensive. So it's something else to be cognizant in addition to these areas as you plan your journey. And Joe, I know that you also plugged this earlier, but this is a lot of information to kind of digest. So it's important to highlight that we will discuss each of these areas in much greater detail in our next webinar, which I think is planned for Q2.
Yeah, that's right. And, it's so like, I keep stressing this because it's so shocking to everyone. It's not just the legal accountants and everyone, it's the ERP system, the close management tool, human capital. It's all of those costs that just build up. So yeah, no, completely understand. Okay. And with that, let's go ahead and get CPE question number 2 out there. Administrator, if you could go ahead and do that, that would be great. Want everyone to get their CPE. And as just a reminder, you must answer all 4 in order to get your CPE. So please answer so we can send out those CPE credits. Give everyone like a few seconds to answer. Like 10 more seconds. All right, Administrator, if we could close that out, that would be great. Okay, well, everyone got it right. That's wonderful. Appreciate that. Everyone that's getting CPE. Okay, so that's phase 1. Lots of planning, lots of hypothesizing, lots of, hey, what is an IPO? What do we do with it? So let's transition to the second step, which is preparing. This is when a private company has decided, yes, I want to do an IPO. And they assemble their team with professionals from, legal, the accountants, the investment bankers, the auditors, as Nathan mentioned, which is so important, and others as well. This is where the company creates their timetable for the public offering as well, and pulling together their financial statements, their strategic plan, and their valuation goals and offering size. So they are embarking on the path, and this is where the company develops their story and rehearses it over and over and over again. So, Andrew, we're going to start with you for this one quickly. Thinking about the IPO team and with everyone involved, what do you think about the importance of building this team and how important it is to the actual IPO process itself?
It's absolutely critical. It's probably one of the most important parts of a successful IPO journey, just because there are so many different people that will have a hand in a successful IPO. A company needs expert direction and assistance to stage a successful IPO, and identifying that team is critical. So we can talk about each of those. I know you mentioned a number of them, but let's start with management, right? Building a strong team starts with the management team. The investment community will look at the CEOs to articulate and execute the company's vision and business strategy, while the CFO will likely be focused on investor relations and company performance. Ideally, management will be comprised of executives who have that public company management or IPO experience. Another crucial step that might get often overlooked is project management, right? So another leading practice is to instill a project management office or leader into the process. A work stream focused on project management, where management establishes governance structure and communication cadence and develops that holistic project plan. This function would be responsible for organizing, planning, monitoring the IPO work streams and timeline, including those key milestones that we were mentioning, so that the teams are working towards the same goal, especially like we were talking earlier, when the accounting teams are going to be focusing on those reporting deadlines and those staleness. So the PMO function will help to mitigate the risks and increases the likelihood of a successful IPO outcome. just by keeping both the internal and external stakeholders focused on the goals. You might have some external advisors. So externally, you want to ensure that you're building the right IPO advisory team early in the process with highly skilled professionals who have extensive IPO service credentials, contacts, and industry experience. So finding the right advisors will generate cohesiveness that will help you achieve optimal results and help you continue in your IPO journey post-transaction, right? So as you're operating as a public company. So some of those functions would include the legal counsel, as we mentioned, making sure that you find a law firm experienced with both IPOs and in your company's industry that'll go to bat to protect the company's interests when dealing with underwriters and SEC staff, the bankers and underwriters and their counsel. So as Nathan has pointed out, the value added by an underwriter in the assurance that the IPO will be properly managed and successfully marketed and supported. Accounting advisors where we would fit in, right? And other specialists. So you'll have your technical accounting or your reporting advisors that would be separate from the company's external auditors for independence reasons. But they would be the ones that would provide the transaction support or offer assistance with financial reporting or technical accounting issue resolution, pre-clearance letters with the SEC, registration statement preparation, right? So they are the accounts that will work closely with the finance and accounting functions internally with the company to make sure, as well as the external auditors and providing audit support. You can bring in specialists that have that SOX or internal control experience that will assist with the design and the documentation and testing of internal controls over financial reporting. So that's going to be in compliance with your SOX 404 program. Cyber, right? Assisting with advice on systems and overall cybersecurity assessment and environment. Your independent auditors, again, verifying that they are in fact independent. You'll want to make sure that you're selecting the firm with experience with public company financial reporting, expertise in GAAP and auditing standards of the PCAOB. And they're going to be the ones that are responsible for performing audits of the financial statements and reviews of interim periods. So you want to make sure that you have a good relationship with them and that you're aligned in terms of all of the underlying tasks that they're going to need to perform and kind of stick to your roadmap.
Sure, yeah.
And just quickly, I mean, there's finance and FP&A, right? So you need to make sure that you're evaluating your budgeting and forecasting processes, identifying weaknesses or opportunities for improvement. We mentioned tax compliance, right? So you're just going to want to make sure that you have the entity structure laid out and understand any tax implications. Investor relations, as I mentioned a little bit earlier, is a function that's required for public companies. They're going to be responsible for reporting KPIs and reporting out to the media and whatnot there.
Sure. And Nathan, I would really like your input on this too, you know, from an investment banking perspective. How important do you see the IPO team being whenever a company is planning that IPO or even, hey, we've decided to do it? And how early do you see that happening?
Sure. Yeah, I think as Andrew said, and I was going to bring this up on the advisory side, if you're a management team that's never done an IPO before, it can be a pretty daunting task. And you're basically hiring a lot of different groups to help you with this execution. And I would say the first two phases as it's laid out, plan IPO, prepare IPO, are, I think, the most critical steps in having a successful IPO and getting things set up, because the execution and the post IPO are going to come if the first two are done right. And assembling the right team, I think, is mission critical. And if you haven't done an IPO before, maybe you don't know all the groups that are out there, because there are a lot of different entities that from audit, legal, and then bankers and underwriters. And there's also insurance that you need to think about, which is a substantial cost that you may not be paying now as a private company. So you need D&O insurance, directors and officers insurance. And that's anywhere from, $500,000 to upwards of $2.5 million on an annual basis, depending on the size of the company. So That's also another piece of the puzzle that you should consider and bring into the table. But as far as hiring the right groups, I think that is mission critical. And to do that, what we recommend is that you have an advisor to assist you through that process. As Andrew said, hire the right advisor. Because if you hire the right advisor, then they have the network, they know the law firms, they know the auditors, they know the underwriting banks that are going to be a good fit for your company and the type of IPO that you're doing. Because they all come in different sizes and shapes. And if you're doing, a $50 million raise for your IPO, well, maybe you don't need to hire Ernst & Young for that.
Correct.
You
Agreed.
hire the audit firm that fits for that transaction. Because Ernst & Young is just going to charge an exorbitant amount of money, and it's going to increase your costs substantially. So finding the right groups like DLA that specializes in this arena, not only is going to be more cost effective, but also you're probably going to get better execution. Because on the smaller firms, E&Y maybe is not as focused as they are on much larger transactions. So right sizing your IPO and picking the right groups, I think is a very critical piece of the puzzle. And when you're hiring bankers, are you hiring the right bank that's going to bring the right investors to the table? Because the right investors are also important to a transaction. And what happens when what happens to the post IPO process of an investor is also important to a stock price and how your IPO is going to trade. So getting with the right bank that knows the landscape well enough to execute these IPOs and give you the right opinions instead of just getting a transaction done is also important for somebody that's considering an IPO. And then the law firms as well. Are you picking the right law firm? And that is all can be curated with the management team, with you guys as the private companies, with an advisor. And I think that that's an important piece to bring to the table when considering your IPO.
Yeah, and Andrew, we were talking about this the other day. It's like a wheel, right? You have all of these different advisors that are working with you as a management team, but you want to ensure you're comfortable with them, that you can trust them. They're the right size for your company. Again, as Nathan mentioned, you don't need an EY or a Deloitte or a PwC if you're doing a $50 million IPO, but getting the right advisors at the right time will help you so much on the back end as you go through that SEC review process, limiting comments and getting through and executing on that IPO so much more efficiently than, otherwise, if you brought in the wrong advisors at the wrong time or a little too late in the game, I'd say.
Absolutely.
Yeah. Okay. So with
Yeah,
that,
you get one time for an impression in a lot of cases when you're going out to execute the IPO. So if phase 1 and phase 2 is done properly and you have everything set up that is planned, the execution piece can be a whole lot better, and you may be able to get a better deal with the right bank as well.
Exactly. Perfect. Completely agree. So with that, let's go ahead, administrator, and put up question number 3, please. Again, just as a reminder, please answer all of the CPE questions so you can get your CPE so we can send that out. Give everyone a little bit of time to answer that. All right, administrator, let's go ahead and close that. Hopefully everyone had a chance to answer. And okay, yeah, pretty consistent answers, which is wonderful. So, as we get back into this, there's obviously a lot that goes into building the right team. And it's important to stress, the company has the opportunity, as we discussed, to select so many participants in the IPO process, from external auditors, lawyers, underwriters, accounting advisors, capital market advisors, and the project management team. So as we said, establishing relationships with the right people is key. So, we've been through a lot, but Nathan, maybe from your perspective, if you could, thinking about the first 2 phases, the plan and preparation phase from an IPO, if you were to name one thing that you think is the most critical part out of all of the considerations that we've talked about, what would you think from your perspective that is?
As far as the process goes, or as far as, you know, why you should do an IPO, or
Now, just the preparation phase, for example, whenever you're preparing for it, what do you think is the most key part of it that you've seen?
Well, we've seen a lot of delays, and I think the audit function is the most important part to get started with first, and then also the advisor.
Yeah.
Because you're going to save a lot of time, and you're going to save a lot of potentially picking the wrong groups and stalls and starts.
Nope.
If we've seen those before, as if you have a group that's not doing the right job and you have to let them go, you need to bring in someone else. So it's almost like starting back over again.
Yep.
And you want to try to avoid that at all costs.
Agreed. Andrew, what do you think from your perspective, from an accountant's perspective?
Yeah, I'm going to take an easier answer. Timeline, right? It's broad, right? But timeline, starting early. You see these two phases on the screen here that we're highlighting in today's discussion. As Nathan pointed out, like they look like they on the flow chart are the same duration as phase 3 or phase 4, but often, those are the most critical and time intensive, right? Phases for planning and preparing for the IPO. So you want to start early, anywhere 12 months, 24 months prior to the IPO. You want to make sure that you're realistic. You want to make sure you have the right team in place. So one area that companies often start with is performing an IPO readiness assessment or a health check diagnostic, right? And that's going to help you understand your current state, your future state, and help you identify gaps. And that'll be the first process to identify and set up and begin building your team of internal and external advisors, as we keep pointing out, including that PMO function. So I think that's probably one of the most critical areas, plan, having that robust timeline, just that you can stick to.
Lots to think about. We've said
absolutely.
A lot in this.
And this is all in addition to your day-to-day responsibilities,
exactly.
Right? So like, it's not like this is now your full-time dedication. So that's another thing that companies just need to think about and factor into this, right? It's not just, outsourcing everything there, because you just need to be able to perform your daily functions. So it's just a lot to consider.
Absolutely. Well, thank you to both of you for this and your insights. Before we conclude, we did want to give a little highlight of the services that DLA can provide, and also Noble. So administrator, if you could go to the next slide, we'll talk about DLA as a firm really quick. So obviously, Andrew and I are accountants, accounting advisors to companies as they go public. So from a technical accounting and reporting perspective, we could do those readiness assessments that Andrew mentioned to see if your company is actually ready to begin the IPO process. We can assist with the resolution of complex accounting issues. We could take the pen, write registration statements, and assist companies going through that ever important external audit that Nathan has been stressing as well. We can supplement operational accounting functions with bookkeeping, month-end close reconciliations. As companies move through the IPO process and become effective or plan to, we could help with internal audit and SOX compliance, developing SOX compliance plans. As we mentioned, cybersecurity assessments. Cybersecurity is such a buzzword with the SEC right now, and something that is still quite new and fresh, and people are still trying to understand. So we've sent the link over the administrator did to our cybersecurity white papers. So please feel free to access those on the DLA website and see how DLA can help with that. And then lastly, of course, valuation services. This could be pre-IPO, it could be post-IPO. As your company goes through the IPO process, looking at tax reporting from a 409A perspective, financial reporting surrounding business combinations and purchase price accounting, goodwill impairment assessments, etc. And then also the accounting surrounding stock options. So DLA, a full service accounting advisory, internal audit firm that is ready to stand with you and partner with you as you go through your IPO process. So with that, Nathan, maybe you can take a moment and talk about Noble Capital, and I'd ask the administrator to go to the next slide.
Sure. Yeah, so I think we live up to the full service investment bank nomenclature and what Noble can bring to the table. We have a proven track record. We've been doing this for a long time, and we provide for companies looking to do IPOs. We provide that advisory service because we know what the key components are to doing an IPO. In addition to that, we help you prepare and outline valuations and how you support those valuations, and we can do fairness opinions as well, which are not always a platform for IPOs, but they can help in an IPO process with management teams and making sure you guys are getting the right valuation and the right deal. And we support you throughout that process or as long as you need us. And then if there's any capital raising that needs to be done in the interim, we assist you with that to get you to the execution part of your IPO, because sometimes these things take longer. And then importantly, the post-deal support as well. We cover 9 different verticals or 10 different verticals. We cover anywhere from 80 to 100 public companies and growing on an annual basis. And so, if we're assisting you in this process and we're getting to know each other, we like to build long-term relationships with our clients. And a lot of times, it's an independent platform, so the analyst does have to buy in. But, our approach at Noble is very fundamentally driven. And so the culture across all the platforms fit in that model. And so if the bankers are taking it on, there's probably some excitement from the analysts as well a lot of times. So we can help with that post-deal performance and raising capital and some of those other things that are needed for a public company that go along with being a public company. And I think also the setup beforehand and making sure you have your story, your timelines, and your deliverables in order is a big thing in our minds for an IPO. And under promising and over delivering is what Wall Street wants to see all day long. And so if we can help you through that process as well and getting that set up, and that comes with the right advisory. And then obviously as underwriting banks, the things that go with that. Negotiating the right terms, bringing in the right investors, and getting you the right valuation.
Absolutely. Wonderful. Next slide, Administrator, please. And this is more of an overview of a lot of the items that you discussed, Nathan. I don't know if there's anything additional you'd like to highlight here.
Yeah, no, I think we covered it. Those are the 4, platforms that we have, and just to add that, they're all mature platforms that have been in place for the last 40 years. And we really have a process to our practice, and there's strong senior level teams in all of those platforms.
Awesome. Okay, Administrator, let's just go to the next slide. This is just our contact information. And with that, Administrator, let's do the last CPE question so everyone can get their CPE credit. All right, going to give people a little bit of time to do that. Give people about 20 seconds. All right, Administrator, let's go ahead and close that out. Thank you for that. And with that, everyone, we really hope you've enjoyed today's discussion. Thanks, Nathan. Thanks, Andrew. Appreciate everything and your insights. There's a lot that goes into these 2 parts of the IPO process. And if we had more time, we could probably talk about it for a full day if we wanted to. For any questions that were submitted in the chat, we will be reaching out to the individual directly because unfortunately we have run out of time, but we'll be reaching out to you in the next couple days. And furthermore, for those that responded to the required number of questions, your CPE will be sent out within the next 10 to 14 days from DLA. With that, I really want to thank everyone for joining today's webcast brought to you by the professionals of DLA, LLC, and Noble Capital. Thanks so much and have a great afternoon.
Thanks,
Bye,
everyone.
Thanks.
Thank you.